3 reasons why. Bitcoin risks falling below $90,000. Bitcoin, the pioneering cryptocurrency, has captivated the financial world with its unprecedented price growth and revolutionary technology. Its potential to disrupt traditional financial systems has drawn both retail and institutional investors, pushing its price into record territory. While Bitcoin enthusiasts speculate about future price milestones, such as reaching or sustaining above $90,000, risks remain significant. Below, we delve into 3 key reasons why Bitcoin faces the possibility of falling below this critical level. 1. Market volatility and profit-taking cycles. Bitcoin's meteoric price rises are often accompanied by equally dramatic declines, a reflection of the cryptocurrency's inherent volatility. These fluctuations are driven by a combination of market dynamics, investor psychology, and the cryptocurrency's speculative nature. The role of institutional investors. The increasing presence of institutional investors has both stabilized and destabilized Bitcoin markets. While institutions like hedge funds and corporations bring significant liquidity, they also introduce vulnerabilities. Profit-taking behavior. Institutions tend to strategically take profits at market highs. For instance, large-scale sell-offs following Bitcoin rallies have historically triggered cascading effects, leading to sharp declines in prices. Market influence. The concentrated holdings of some institutions mean their decisions disproportionately affect the market. A sudden exit by even a few key players can lead to panic selling. Retail investor panic. Bitcoin's retail investors, often driven by emotion rather than analysis, contribute to its volatile price movements. Fear, uncertainty, and doubt, often referred to as FUD, spread quickly among retail traders. When prices show signs of decline, many retail investors rush to sell, further fueling the downturn. Historical price corrections. Bitcoin's history is marked by periods of extreme highs, followed by steep corrections. After reaching its peak in late 2017, Bitcoin fell by over 80% within a year. Even in its more mature state, the cryptocurrency continues to exhibit cyclical patterns that suggest a risk of falling below $90,000 during future corrections. 2. Regulatory uncertainty. Bitcoin's decentralized nature has often clashed with regulatory frameworks around the world. Governments and financial authorities continue to grapple with how to control and integrate cryptocurrencies into existing systems. This regulatory ambiguity poses significant risks to Bitcoin's price stability. Government interventions. Governments worldwide have adopted varying approaches to Bitcoin, ranging from open support to outright bans. China's crackdowns. China's repeated crackdowns on cryptocurrency mining and trading have historically led to significant price drops. Its strict stance sends shockwaves through global markets, causing panic among investors. U.S. regulations. The U.S. Securities and Exchange Commission, SEC, and other agencies are intensifying their scrutiny of Bitcoin and other digital assets. Proposals for strict compliance requirements, such as Know Your Customer, KYC regulations, and increased taxation on cryptocurrency gains, could deter investors. Global regulatory divergence. The lack of a unified global approach to cryptocurrency regulation creates uncertainty. For instance, while some countries adopt progressive policies, others impose heavy restrictions. This inconsistency can erode investor confidence and lead to price instability. Potential legal reclassifications. Bitcoin's classification, whether as a security, commodity, or currency, remains a contentious issue. A shift in classification could result in significant changes to how Bitcoin is traded, taxed, and regulated, potentially undermining its price growth. 3. Rising competition and blockchain evolution. While Bitcoin remains the most valuable cryptocurrency, it faces increasing competition from newer blockchains that offer enhanced functionality, scalability, and efficiency. Ethereum's rise. Ethereum, the second largest cryptocurrency by market capitalization, has carved out a dominant niche with its smart contract capabilities. Decentralized applications. dApps. Ethereum's robust ecosystem supports decentralized finance, DeFi, non-fungible tokens, NFTs, and other applications, making it more versatile than Bitcoin. The merge, Ethereum's transition to a proof-of-stake consensus mechanism, significantly reduced its energy consumption and increased its appeal among environmentally conscious investors. Emerging competitors. A host of newer blockchain platforms, including Solana, Cardano, and Polkadot, are vying for market share. These platforms boast faster transaction speeds, lower fees, and innovative features that address the limitations of older blockchains like Bitcoin. Bitcoin's technological stagnation. Bitcoin's conservative development approach. Bitcoin's technological stagnation. Bitcoin's conservative development approach prioritizes security and decentralization, but limits its adaptability. Critics often point to Bitcoin's slow transactions. Bitcoin processes about 5 to 7 transactions per second, compared to thousands on newer platforms. High energy usage. Its proof-of-work consensus mechanism requires significant energy, drawing criticism from environmental advocates. Scalability challenges. Without meaningful upgrades, Bitcoin risks becoming obsolete in the face of advancing blockchain technology. Broader economic factors. In addition to the above, macroeconomic conditions also influence Bitcoin's price. Interest rate policies. Rising interest rates reduce liquidity in financial markets, often leading to a decrease in speculative investments like Bitcoin. Global recession fears. Economic slowdowns can dampen risk appetite among investors, leading to reduced demand for cryptocurrencies. Can Bitcoin overcome these challenges? Despite these risks, Bitcoin has a track record of resilience. Its decentralized nature, growing adoption as a store of value, and institutional interest provide a strong foundation for recovery. However, sustaining levels above $90,000 requires addressing these key challenges: enhanced scalability and utility through technological upgrades, regulatory clarity to reassure investors, broader adoption to ensure continued demand. Investors must weigh the risks and rewards, recognizing that Bitcoin's volatility is both a challenge and an opportunity. While falling below $90,000 remains a possibility, Bitcoin's potential for long-term growth remains compelling for those with a high-risk tolerance. Conclusion. Bitcoin's journey is far from over, but it faces substantial hurdles that could push its price below $90,000. Market volatility, regulatory uncertainty, and rising competition are significant factors that demand careful consideration. As the cryptocurrency market matures, Bitcoin's ability to adapt will be critical to maintaining its dominance and reaching new heights. For investors, understanding these dynamics and staying informed is essential to navigating the risks and opportunities in the ever-evolving cryptocurrency landscape.